Good morning, all. Welcome to the morning podcast with me, Sudeep Shah. In today's podcast, we would be discussing about what to expect in Nifty and Bank Nifty from here on, along with the key levels for both the indices. We will also be discussing on sectors and stocks that we should be focusing on for the day and for the next few sessions. Now, from the price action perspective, we saw Nifty continuing its buying momentum and outperformance was witnessed as compared to Bank Nifty for the second consecutive session. And despite the emergence of selling pressure in the last hour yesterday, Nifty still closed 0.5% positive, while Bank Nifty ended the session with a minor cut. Uh, Coming to the macroeconomic data, if we see the dollar index that is still sustaining below 104.5, while the US 10-year bond yields are also sustaining below 4.4 levels. Now, this is quite positive from the equity market perspective, both global and Indian. Brent crude oil prices are also trading around $80-82 a barrel, and we expect them to trend lower up to $77-78 in the next few sessions. This also in addition would be positive for the INR as well as the overall equity markets, that is the domestic equity markets. Now, with this decline in the 10-year bond yields, the S&P 500 has also seen a strong upside momentum in the last few sessions, and we feel post some consolidation, this index could head towards 4600 4620 levels on the upside. Even if we have a quick check at the Asian markets, except Hang Seng, most of the Asian markets are in minor green. So we feel that gift along with the gift nifty, which is showing a 20-25 point cut, it would be kind of a sideways opening, and then we will have to see how the levels work. So coming to the nifty levels, on expiry day yesterday we saw nifty taking support at 19630 19640 zone, and it continued its positive momentum up to 19850 19875 on the upside in the first half. Now, however, selling pressure re-emerged at higher levels exactly from the area where Nifty had formed a swing high in October around 19850 zone, and there was a notable gap which was witnessed at that same zone, and this gap was formed on 21st September, and that is still unfilled. So this zone of 19850 19900 now becomes a very important resistance, and that must be surpassed for any extension of this rally towards its lifetime highs. On the downside, key support zone now would be 19550 19600 area. That will act as a very strong support now, and only below this zone, if Nifty sustains, we could witness a profit booking move up to 19400 19450, where the 20-day exponential moving average is placed. So all in all, we feel that the range for Nifty for the next few days could be 19550 to 19850 19900 on the upside. This could be the new range that the markets could find itself consolidating within. And why is this zone 19550 important? This number 19550 is important because this is the downward sloping trendline breakout zone, which is formed by joining the swing highs of 20,222 of September 2023 and 19849, which was registered in October 2023. So there was a breakout a couple of days earlier from this trend line around 19550 19570 zone, and now that breakout zone, it could be retested, and this could act as an important support. And this zone also is a 50% Fibonacci retracement zone of the entire fall from 20,222 to 18,837. So this zone now 19550 will be the all important number that we have to watch out for. Coming to the open interest data, now if we see, significant put writing is visible in 19700 and 19600 strike prices in the new expiry new weekly series, while on the calls front 19900 and 20,000 strikes are witnessing considerable open interest additions, and hence overall range for the day and for the next few sessions could be 19580 19600 on the downside and 19880 19900 on the upside. Coming to Bank Nifty now, expect a negative opening here because of the RBI's circular regarding increasing the risk weights of certain banks and NBFCs. And as it is, Bank Nifty has underperformed significantly in the last 2 days, and it could not cross its previous day's high yesterday now, which was closer to 44,400. So it's kind of a minor double top formation there. The immediate support for bank nifty is around 43,700, 43,800, where the 20-day exponential moving average is placed, while the resistance zone is closer to 44,400, 44,450 zone. Above this, above 44,500, bigger short covering move is likely to be witnessed up to 44,900, 45,000 on the upside. On the other hand, if we see the breach of 43,750 levels, 43,700 levels, then index could revisit lower levels of 43,400, 43,300 on the downside. For the weekly series, we are seeing significant open interest built up visible in 44,000 as well as 43,800 puts, while 44,000, 44,500 calls are witnessing aggressive writing. So this implies a near term broader range of 43,700 on the downside and 44,500, 44,600 on the upside. Now coming to stocks and sectors that are in momentum, IT stocks yesterday witnessed a fresh breakout with the likes of LTI, Mindtree, Tech Mahindra, TCS, HCL Tech, Infosys from the large caps outperforming, along with Coforge, Emphasis, KPIT Tech, Birla Soft, Oracle Finance from the mid cap space. BHEL, Cummins and L&T from the capital goods space also saw decent build up on the long side and should be on the radar. Autopack led by Eicher Motors, Hero Motocorp, Tata Motors, Bajaj Auto witnessed strong momentum on the upside and outperformance against its broad-based indices. From the broader market, bullish setups were observed in ICICI Lombard, Ultratech, Titan, Polycab, InfoEdge, Dixon, Apollo Hospital, Lupin, Apollo Tires. All these stocks are looking good on charts along with data supportive on the derivative front also. Now coming to FII DII data, yesterday's FIIs for the second consecutive day bought closer to 960 crores in the cash segment, while DIIs have also been buyers to the tune of 700 crores. FII's long short ratio for index futures has improved to 22.7% and they've squared off closer to 16,000 contracts of index futures yesterday, which were on the short side. On the stock futures front, FIIs for the second consecutive day have been net buyers in stock futures, and they've yesterday bought closer to 61,500 contracts of stock futures. On the index options front, not much activity has been visible as FIIs have just sold a small quantity of 1,500 index call option contracts, and they've sold even 130 contracts of index puts also. So not much to speak about the index options data. So now just to summarize, key support level for Nifty could be around 19,550, 19,600 zone, and the resistance zone could be 19,850 to 19,900. Above 19,900, we could see a further momentum building up in Nifty up to 20,050, 20,150 levels. For the bank Nifty, key support zone would be the 20-day exponential moving average area of 43,700, 43,800 zone, and the resistance could be around 44,500, 44,550. Above 44,600 levels, bank Nifty could witness further buying momentum up to 45,000, 45,200 levels. So friends, that's all for today. Thank you all for regularly listening to our podcast and wishing you all an energetic day ahead. Do tune in tomorrow for more market related updates and insights. Thank you all.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.